Now we're talking back to work tonight. I hope you guys had a fantastic day out there, but it's time to get back to work. A lot of great trades setting up for Thursday's trading session. It's Wednesday evening after all. It is September the 8th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. If you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Thursday's trading session. I got a great video in store for you guys tonight. Charts are all ready in the background. The gold is here. The Nasdaq is all ready, and the S&P is always ready for some good trades setting up for Thursday's trading session. Got some ranges, got some really strong breaks down, bunch of kind of breakout pullbacks we're watching for tomorrow, and some real interesting clues hidden inside the moving average. So there's a lot to learn in this video tonight. There'll also be some great trades setting up for tomorrow. By the end of this video tonight, you'll know my favorite trades to trade tomorrow. And of course, you'll also know some stuff to avoid to keep yourself out of trouble whether you're trading on your own or you're trading with us tomorrow in our trade room. Before we jump into the video tonight, though, as always, make sure you subscribe to our YouTube channel. I published this video with my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe, hit that little bell icon so you always get that update every time we upload something new. If you have any questions for me, drop those questions for me in the comment section. I'd love to answer any questions that you might have. And as always, I appreciate you guys tuning in every evening. If you enjoy this video as much as I enjoy making it, if you use this video to get your charts right, get those mind right, hit that like button for me on this video. Really appreciate you guys carving some time out. So thank you so much for tuning in to this YouTube channel. But enough of the intro, though. Time is ticking. Thursday is right around the corner. We got a lot of good trades for Thursday's session. Got some ranges on the E-mini, some ranges on the Nasdaq, some ranges on the gold right now. A couple big clues right now. I mentioned earlier we got some big clues from the moving average. We are definitely seeing a rise on the S&P right now, but the buyers don't look very strong on this. So we may get that move going higher, but I'd love to see another leg lower here on the E-mini. You know me. I'm a trader, right? So I've got some ideas for tomorrow, but I'm going to make sure that we know whether we go up, we go down, or we go sideways. We'll put together the plan for whatever this market gives us. But I would love to sell this thing rolling lower here on the S&P. Same thing really here for the Nasdaq. Nasdaq has this range right in the middle. We're up around those highs here. I'd love to get this short going back down again. We may also see, just at the S&P, we may see a short squeeze for some runs back up to these highs overhead. So we got some long trades, got some short trades in the Nasdaq. And then over on the gold, of course has that range right in the middle. Get that big breakdown here. This is that kind of breakout pullback I was talking about, right? Breakout pullback and looking for that roll going lower. So I'll tell you, lots of great short setups that we have on our radar for tomorrow. But you know me, I'm always going to keep an eye on the short squeeze, right, on those reversals. So I'll make sure we know how to trade this stuff to the long side. So S&P, Nasdaq, gold. Again, would love to get some shorts going, but definitely can't underestimate the potential for a nice short squeeze with the last couple days being so bearish. Before we jump into the charts tonight, though, let's make sure we know what our schedule looks like for tomorrow. Tomorrow, again, is a Thursday that kind of feels like a Tuesday that I'm sure right about now, as the holiday weekend kind of hangover wears off. I wish it was a Friday tomorrow. But nonetheless, though, lots of great news on the radar for tomorrow. And I'm thinking probably some pretty good trades for tomorrow. As we mentioned in the trade room throughout this week, we always expect these first couple days as we go into the fall trading season to be a little bit off balance, right? It's a little bit of kind of transition, I guess would be the word to use. As we get out of the holiday, we get out of the summer, people get off the beach, they get that sand out of their ear, and they get back to work. So the next couple days definitely should be pretty good in our trade room. I would hope you'll have a pretty good day if you're with us the next couple days in trade room as well. Just a heads up, we are watching for some rollover on the E-minis. So the Nasdaq, the S&P, obviously Russell, Dow, I've traded those as well. My favorites are the S&P and the Nasdaq. So be aware of that. We are currently currently on that 0921 contract on the E-minis will roll forward to that 1221 contract. Now, remember, we're not talking about contract expiration, right? We're talking about rollover. So, you want to compare, for example, the S&P, the 921 right now, we've got, 1.5 million contracts traded. If we come in tomorrow and if we see that December 21, right, that 1221, if we come in tomorrow and we see more volume on that 1221 contract, that's when we make the roll. And it's not very complicated. You just simply switch from trading the 921 to the 1221. I'll make sure to keep you guys on that correctly tomorrow. Same thing to Nasdaq, right? Nasdaq's on the 921 right now. Once that 1221 has more volume, and it could be overnight tonight, it could be tomorrow. What I'll generally do is look at this stuff early tomorrow morning. If we're anything close, I'll usually move over to the next front month, as they call it. So let's say tomorrow morning you came out and the Nasdaq, had 75,000 contracts, and the 1221 had 74,000 contracts. If they're close, just make the roll. Just go to the next contract month, right? So don't worry too much about that. So if they're relatively close, I usually make that move over. But we're definitely watching that rollover here in the next, probably the next 24 to 48 hours here, probably before the end of the week. So we're going to keep an eye on that. As we look at the news for tomorrow, jobless claims, of course, are the big headline news for tomorrow. Everyone is waiting for that unexpected spike in the jobless claims numbers. Did you guys see that JOLTS report today? 10.9 million. I mean, 2 million more job openings that people are actually on this, or that people actually in this country. So there's a ton of job openings right now. It'll be interesting to see if those jobless claims, they've been trending down, right? We saw, I think last week it was something like a pandemic low or a 10-year low, something like that. So what you want to kind of keep in mind for tomorrow is if we see that jobless claims number spike, if it spikes, that will really be what kind of spooks the market. And, not to say the market would go up or down because of that, but that may lead to a nice big reaction move from that jobless claims tomorrow morning. So we're definitely keeping an eye on that. If the number keeps on going down, probably not going to get much of a reaction to it. But if it spikes up, we start seeing 550, 600, 700, that's going to be when markets go, oh, what's going on? They'll probably react to that accordingly. Remember, we're not going to trade the news, right? We're not trading the news. The news is noise. It's an easy way to blow your account in a very short period of time. We trade the reaction to the news. So by 8:40, 8:45, we'll pick up the pieces and we'll go for whatever the market moves after that news comes out. Now, tomorrow morning, we open the trade room up, 8 o'clock Eastern time. I would love to have you there right with us. We'll have a front row seat for that jobless claims report. We'll get the charts all prepped again, go over all of our rules, and we'll trade together until lunch tomorrow morning. I'll put all of the membership information. I'll put the links to get started as a new member and join our trade room. I'll put that right in the description of the YouTube video. I'll also put a big button for you guys on the website below this video if you're on the blog at Sideways Markets. All right, that's the game plan. Well, that's what we're looking at for the schedule for tomorrow. Jobless claims, keep an eye out for the rollover. And, of course, hopefully I'll see you tomorrow morning at the opening bell. Back to some charts here for tonight. S&P, Nasdaq, gold, everything's ready to go here. Let's grab the S&P first, my favorite of the E-minis. I'll tell you, if you're looking for consistency, it's such a consistent mark. That's why I love this S&P a little bit more than Nasdaq. Nasdaq's great, but if I could only trade one market, this is exactly what I would trade. Nice and consistent day in and day out. Well, today was a pretty messy day, as you can see here. Kind of a weird, again, like I said earlier, the first couple of days after we come back from that Labor Day weekend, it's always a bit of a transitional day. What it looks like, the most kind of important clues right now, we had that big move down, had that pop back up. It looks like, and I talked about breakout pullbacks, it's not exactly what's going on, but it looks like we get a kind of a bear move down into a trading range. We get that really strong push, and now they're kind of sitting right on the kind of the underbelly of that range. And the sellers would love to go down for another leg lower, right, off that breakout pullback, or we may see that kind of short squeeze, that short covering rally, that bear failure, and that snap back higher. So one of the big clues on this chart right now is the fact that we had that big, strong move down. Anytime we see those strong moves, there's this huge magnet right on those lows. Now, maybe you're wondering, well, wait a second, this looks pretty bullish, right? We have some higher highs, we got some higher lows, but here's a really easy way to know what direction is the most consistent direction, right? If you want to get better results in your trading, it's a good idea to go with the momentum of the market. Here's an easy way to tell who has control, as I call it, control of that momentum. Look at how strong that move down is, but more importantly, look at how far the separation is away from the moving average. When markets separate off the moving average, right? It happened there. It happened there. See when the bears take it? The bears get this big explosive separation off the moving average. Now look at the buy side. Do we see the same thing? No, not even close. Look at the buy side. The buyers are struggling to get even some daylight in between the moving average and the candlestick. So forget about the lower lows, the higher highs. I know we learned about that as rookies, but that's really not a very good gauge for what momentum is right now. You could easily say though, right? Lower lows, lower highs. We're definitely more bearish than we are bullish right now. So knowing that is the case, again, I think you got pretty much one big range here right now, that kind of thing, kind of leg right in the middle there. It does look like, though, again, like I said earlier, it looks like it's kind of a weird way they did it, right? Kind of a range, breakout, pullback, and looking for that next leg lower. So I've got a big bullseye right back at those lows. The bears want to get back to retest those lows so they can keep the party going. There's this huge open space down there to 44.65. That would be great for shorts tomorrow. If the buyers can kind of get this going, they're going to want to take out those highs at 45.27, 45.25 up there. Those will be some big objectives for those buyers. If it really starts to push, you got that weekend gap, right? That 45.33. That's last Friday's close. That'll be a really easy target if these buyers start to really get their party going here for tomorrow. So got some good trades ready for you guys. Let's go over them here right now. The short side, of course, is definitely going to be the side that will probably be the easiest for tomorrow. Couple things you want to think about here as we go lower. First of all, we definitely have, there's no doubt about the momentum we have going for these buyers right now. The easiest money you're ever going to make getting short is when you trap in the buyers and you sell into their stop losses. So that's exactly what I want to do here. One way to do it is to look at this as a 1, 2, 3 move, draw a trend line coming off that high, a new trend line off those lows, new trend line off the high, that creates my channel, and then grab that first pullback. Okay, this will be a pretty reliable way to do it, right? Now we've got kind of that 2-try rule in play that we talked about in last night's video. You can see what happens on this stuff, right? Markets love to go up. They try once, they try twice, and they come back down. This is exactly what's going to happen here. We go up, buyers once, buyers twice, and come back down. Now that would kind of be the ideal short as we come off the high of that channel. We may not get that kind of ideal short. The market may kind of skip or kind of fall out of bed here, so to speak. We may get something more like this, where it makes a tumble. The buyers, of course, try to buy it once, and now we're looking for that trap as we go lower. What you want to remember is the closer we get to those lows, the more important it's going to be for that trap entry. So if I can get this thing to roll over here and go lower, I can grab that trend line, find that channel, and I can look for that short. I don't need that trap because, of course, I'm not selling very low. If the market really rolls and starts to run, though, that's exactly where a trap is really going to be important for that short going lower. And remember, the way you want to look for it is look for that strong move down, look for a shallow pullback, that kind of lower low, and that trap high. And if you can combine it with the channel, even better. We don't need the channel at that point, but if you can combine it with the channel, absolutely, that would be wonderful. And then another thing I always look for is as the market, let's say for example, we take out those lows, don't be afraid to walk it right back up, let the buyers try to buy it again, and sell it right again. We see quite a bit of those, right? So we get the big run down, we roll up, the buyers try to buy it, and we can sell into those stop losses. So those failures would also be very much on my radar going lower here. How would we buy it as the market goes down right now? If the market does roll lower here, the most important thing you want to do is when you get down to those lows is wait for exhaustion. Wait for the bears to kind of, wait for the bears to struggle to keep it going lower. So as we take out that low, now the bears try once, the bears try twice. The easy way to find exhaustion in the market, one of my favorite tricks, is to draw a trend line off of that low. Look for a nice strong signal coming off the trend line. All those stop losses for those sellers now are sitting right above that high, and I can now buy now coming off of that low. Now, this oftentimes turns into a kind of a reversal move. You can grab a trend line off that high, trend line off that low, and you can buy that pullback as well, right? So again, it's kind of like it's basically a failure pattern, okay? I call these 2-try failures into that pullback. Now, keep in mind that pullback, I'm seeing pullback right now. This is a 6,000 tick chart. The way that I'm going to actually trade that tomorrow, I'll drill down to a faster time frame, and I'll find a couple different price action setups. Traps are my favorites. Failures are great off that low, and then into pullbacks. Again, this is a 6,000 tick chart. We're not going to trade off a 6,000 tick chart on that pullback. Now, what I'll do is I'll go over more of the details of kind of how I drill down and how I find those entry setups, those price action setups. I'll cover all of those in our quick start class. I'll put a little link up there for you in the upper right-hand corner. If you haven't done so yet already, you definitely want to grab that quick start class, because I talk about the right time frames to use, how to find levels of support and resistance, and then, of course, how to use those support and resistance to trigger the entries with my 4 favorite price action setups. I also include hundreds of examples of how we apply those price action entries to our favorite futures markets. So definitely grab that. If you're looking for an edge in the market, if you haven't quite got that consistency yet in your trade account, I teach a very simple, a very consistent, and a very reliable strategy, my 3-step strategy in that free quick start class. So make sure you grab that in the upper right-hand corner. Now, could we trade a breakout? Right? How would a breakout look? A breakout is definitely possible because, again, lots of bears in the market right now. If we were to punch lower, hold that pullback, and start to really run, if we get one of those 1, 2, 3 breakouts, if it really starts to push, again, if we end up getting that 1, that 2, and selling it back down, let's say, for example, now they hold that next pullback and they blast. If we get that 1, 2, 3 move lower, now we're looking for more. Find that new channel, find that high, drill down to your faster time frame, and grab those shorts off the high of that channel. Again, we get a lot of open space there down below us. So lots of options for the short side here right now. We'll obviously fill in more of the details tomorrow morning in our trade room. What if we go higher here on the S&P? What if we go higher here? The problem, of course, this point now is going to be it's basically one big trading range. If I want to be a buyer, I have to get a lot of strength. There are 2 ways to buy this as we go higher. One of them is going to be a pop-up, a pull back to the moving average, and a strong jump off the moving average. Okay? The most important thing is it has to jump off the moving average. If they don't jump, we're going to focus on the sell side because ranges act like magnets. I'll talk about the sell side here in a second. If I can get that 1, 2, 3 move, I can then mark up that high, I can mark up that low, I can drill down, and I can buy that first pullback. Remember, the first test is always going to be the best test when it comes to price action trading. So I want to get that 1, 2, 3. I'm not going to buy the first one again I'm not going to buy anything here until I see this thing break higher. Once we see it pop off the moving average, that's when you've got momentum on your side. And the most important thing is, yes, we know we're at these highs, but if you have enough strength, it's almost a guarantee that pullback will at least retest that high. It may not keep going forever, and if it does, again, we know where the market wants to go, right? What was that level up there, right? 33, right? But The most important thing, though, is you want to make sure you buy that first pullback, right? Take that profit off the high and see how far it goes from there. If we were to really jump up, get that shallow pullback, that higher high, that's exactly where you see those traps come in. Again, this all goes with momentum. If we see enough strength going higher, that shallow pullback, that higher high in price, that trap is going to be a money trade. It'll be a great trade for tomorrow. And of course, we can mark up a new channel. The channel won't be required, but it definitely won't hurt. Now, a lot of you guys have asked me, well, how do you know how strong is strong enough? That's where experience comes in. Again, the moving average is a big part of this. We'll go over more of those smaller details tomorrow in the trade room. And again, I've got a lot of examples of how we trade this setup inside that quick start class that I mentioned before here, right? So definitely grab that, see more examples of that, and come out and join the trade room. Join the trade room. That's exactly what the trade room is there. So you can see exactly what things look like as they're developing. One thing you'll want to be careful of as we go higher. Let's say we go up and then we get this really deep pullback, right? Deep pullback. I mean, if it really pulls back deep, that's when we're probably now looking for that 2-try short back into that range. It's kind of same idea we've been talking about down here. So what you're really going to be careful with is if we make that run up, maybe we get in on the way up, maybe we don't, and then on the pullback, we really slip and start to go. If that happens, that range below us is acting as a magnet. What I like to do is grab a new channel off that low, or grab a new trend line, mark that channel, find that trap, and then simply grab it off the high of that channel. This 1 try for the buyers, 2 try for the buyers. Again, a trap would be great. And the lower that entry, the lower you are on that, the more important that trap is. A lot of times you'll see it go up. The buyers will try once. The buyers will try twice. You'll get that, kind of channel coming down. You won't get that trap. And you won't need that trap, again, if you're way up top like that. But you're going to need that trap, though, if it really comes crashing back down and we're selling a lot closer to that trading range, right? Remember, the closer you are or the lower you are, the more you've got to think about those traps, all right? We'll go into more details tomorrow morning, obviously, once the opening bell rings. If we sit inside the middle, stay out of trouble, stay out of that middle. Let's keep going here. S&P is all prepped up. How about some Nasdaq? Oh yes, Nasdaq is all ready, and this is where we start to see more of those kind of breakout pullbacks. You know what I'm saying? So this is definitely going to be that a much better example of breakout pullback. Okay, we got that range here. The day begins pretty much in a range. We see this very strong move down. Again, anytime we see a strong move in one direction, what do we usually get? Well, you can see right here, there's that strong move, that shallow pullback, that lower low, and there's that trap. And of course, the trap is successful. It doesn't matter where you are. It doesn't matter where you are. We're sitting right at a major area of support. Yeah, that's why I always tell my clients, no excuses. No excuses. I don't care where we are. If we have enough momentum, take that darn trade. If you're worried about a loss, trade a smaller position size. Simple as that, right? Or if you're really worried about a loss, trade in a simulator until you get the confidence going, and then you can move over to your live account from there. Once you see this stuff work for a few weeks with me in the trade room, you'll find it pretty easy to transition from that demo account to that live account. Now, of course, again, strong move down, you expect a retest of that low. Now, you'll notice again where we are. There's my trading range, give or take. See how they get the range going? They break down and we're holding the underbelly of that range. Very similar in certain ways to the S&P. Also very similar to the S&P. Look at how the separation looks every time the bears take it. Look at that big separation. Big separation. Big separation. Big separation. How about the buyers? None. 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 Right? Zero separation. I use the term separation, right? How does it separate away from the moving average? This is a very good clue again. Don't let these higher highs and higher lows fool you. The bears have this thing, right? They have this thing still. Now, does that mean the buyers can't take? Of course not, right? The buyers, they can do whatever they want tomorrow. The market will do things as it makes sense all the time. It's you definitely better get used to it, right? So we see lots of times the bears have control when the opening bell hits and the bulls take it higher. So we definitely will make sure we're ready for everything. I'll tell you, if this was at 10:15 tomorrow, this would be a great short. 1 try for the buyers, 2 try for the buyers. That pattern right there, that's exactly the pattern we just talked about, right? On the S&P, selling off the high. If it wasn't, if it wasn't 6 o'clock in the evening right now, I would say, or Eastern time, of course, I would say this is a great pattern short. Little bit less reliable, obviously, as we come out of the closing bell, kind of into the overnight Asian session. So again, I'd like to be a seller on the Nasdaq, right? That seems like the easier money right now. If we go higher here, I definitely have potential for a nice short squeeze, going back up to retest those highs, maybe the all-time highs tomorrow, up around that 15,700. The bears would love to retest the major lows. Bears would love to retest those major lows. They'd love to get this party going down to that 415 down there. That's another. And look at how wide open that space is. This could really get fun for those bears if they can crack through those lows here. So how do we trade it? How do we buy it? How do we sell it? What if the market rolls lower? Now, we just made a new high on this. So anytime we make a new high, we have to, as they say, reset the count. So for example, as we go lower here, I would love to get a 1, a 2, and a trap for a short going lower. I would also be well open-minded to a 1, 2, 3 move going lower. Grab that channel, right? Short the top of that new channel. And again, I say short the top. I'm waiting for a price action setup, right? We're not just going to blindly sell the top of that channel. My favorite entry setups are traps. Failures often then lead into pullbacks in strength. I talk all about these price action entries inside that quick start class if you're watching this stuff for the first time right now. So definitely be aware of that. Most important thing right now, though, is just find a way in on the short side. If it rolls lower, right, kind of rolls lower, look for that trap entry as we try to go back down to retest lows. Can I grab that hidden channel? I mean, wouldn't that be a beautiful setup, right? As we go lower here, if we come in, the buyers try once off this kind of rising trend line I've got drawn in, right? Buyers try once. Buyers try twice, draw that trend line, find that channel, grab that short off the high. These are fantastic opportunities there to sell it. And again, the lower we are, the more critical it is for that trap entry, right? Those traps, like I mentioned earlier, those trap entries going back down in. What else do we have here right now? Again, as we go lower, let's say, for example, we make a strong run lower, whether or not we've got the 1, 2 back down, or maybe just strong roll lower. If it holds that pullback off the moving average and jumps, now remember, you really got to get it, right? It's got to really pull back and go. It has to really go here, right? Not just a little bit of strength there. It's got to go. No, I'm not going to sell that pullback just because you're selling right into that low. I would sell that. I would sell that pullback if we saw something like this where it really takes off the downside. We see a shallow pullback, a lower low in price. I would sell that. Yep, just because we have some momentum. Anytime we see all of that momentum in one direction, it doesn't matter where you are. I would definitely sell that. I would definitely look for a channel on that. If I can get it, might not get the channel there, but it doesn't really matter, right? That trap off the high there. But again, though, right? Think about this market rolling lower. Think about that moving average coming over, those shorts coming in and pounding it, running lower. We call those 1, 2, 3 breakouts or 1, 2, 3 breakdowns. Mark that low, mark that high. There's your new channel. drill down to a faster time frame, right? As I always say, this is a 4,000 tick chart Nasdaq. Remember, this is the 921 contract. We may be on the 1221 contract tomorrow morning. Unfortunately, I can't really predict when that rollover will be. It may be tomorrow. It may be on Friday morning. It looks like it's probably on Friday, but who knows? We'll wait and see what the market gives us. So we drill down and we'll short off that first pullback. Again, I'm not going to trade this one, but if I can get that 1, 2, 3 breakdown, now we're talking. I can definitely get that short going with confidence. One more thing to keep in mind here on the short side as we go lower, this would also apply to the S&P as well. Let's say, for example, we really race lower, and then instead of pulling back and go and kind of grind, This will happen sometimes. It's not a very clear breakout, but the grind is the giveaway. The grind is always the giveaway. What you want to do in that situation is don't chase it down here. When it grinds like that, remember, everybody's waiting for that pullback. Everyone's waiting for that pullback. And so once it does pull back, it's going to get sold pretty aggressively. So we oftentimes see and again, this will also apply to the S&P 500, that first chart we saw tonight. If it really pokes lower and kind of grinds here right now, just wait for that pop up. Wait for those buyers to come in. Let them try to scoop up those that long and sell right into those stop losses as we go. Very, very simple pattern. I love these types of trades where, you get that strong push down. It's grinding. These are spiking channels, right? Spiking channel patterns are really powerful. The key is just wait for the pop. Don't try to predict the pop. Don't try to short into the pop. Just wait for that pop. Wait for those buyers to come in. They'll try to buy that pullback, and once they do, their stops are right below that low, and you can hit them. It's a really, really great, again, we call those failure trades in our trade room, and we'll do that tomorrow morning on a much faster time frame, obviously, right? Not a 4,000. You could trade a 4,000 tick chart, but a faster time frame will give you better entry signals. You'll get a lot more precise entries getting in and getting out on a faster time frame. We know this market is a lot of open space down here. So just be aware there's probably going to be some targets down here we'll find tomorrow in the trade room. So we'll kind of clue you guys in on that tomorrow morning at the opening bell. What if we go higher here? That's kind of the tough part right now, right? I wouldn't be afraid if we went higher. We got that pendulum swing right up there, the middle of that range right there. I wouldn't turn away a sell if the market was to pop up, okay, and go 1, 2. Absolutely, I will still be looking at that short. Just because, again, it's kind of the breakout pullback environment here. And remember, the buyers do not have control of this momentum right now. They do not. So even if we do see it go higher, I'm still looking for that 1, 2 trap go lower, that 1, 2 channel short going lower, or right, it pops up. We come back, we go 1, 2, 3. Oh, it's on. Mark that low. And I trust me, I would love to sell that first one, but again, it's just that's not the reliable trade. If you want consistent results, you got to trade the most reliable setup. That's just not the most reliable setup. The most reliable setup, the one that will consistently make you money, is the one after that pop. Now, again, if it pops up and goes 1, 2, then yes, that is the reliable setup, right? Because the buyers are exhausting. But if it simply pulls back and rolls lower, you just don't know that yet. You don't know it enough yet. So wait for it to turn, mark that low, mark that high, drill down to your faster time frame, and that will be a great short there because now you get a great risk-reward ratio. Put that stop above that high, big old target back to those lows. As you can see, there's plenty of ways to trade this as we go into Thursday's trading session. The big thing for the buyers going higher, I'm either going to be a 1, 2 jump, okay, like always. Show me the buyers mean it. If the buyers really get some separation away from the moving average, good. Now we know the buyers have control. We know where they want to go, and now all we do is find a way in. My favorite way to do it is find that tight channel, drill down to a faster time frame. You'll oftentimes see a failure off that moving average, failure into pullback combination. We see a lot of these combination setups in our trade room. Failure off the low, below the moving average, into that pullback as we go higher. Traps are great off those channel lows as well. So again, once those buyers take control, and then sometimes what happens is sometimes the buyers go, see ya, and it just shoots. Again, could easily happen. This is the Nasdaq, for crying out loud. The Nasdaq can do whatever it wants. It shoots higher. We see a strong move up, a very shallow pullback. The shallow pullback drives the buyers crazy, right? It basically sets the hook. Now the buyers can't resist the next one. The higher highs, those confirm the move. Then you wait for that trap, and that trap it's I don't want to say easy money, right? Because, this is I heard someone say over the weekend, trading is the hardest easy job in the world, right? Because it is, you're kind of constantly uncomfortable. You know what I mean? There's very few times when the trade is like, oh, that's the perfect trade. Perfect trades only happen in books. They really do. It's usually just, it's like, okay, we're almost perfect. That old quote, right? If it looks like a duck and smells like a duck, it's going to probably act like a duck, right? So it may not be perfect up there, but that's all kidding aside, of course, that's a great trade as we go higher there. What, again, on the S&P I mentioned earlier, what you really got to be careful with is if the market really sprints up and then you start seeing a really deep pullback. You get underneath the moving average, start going lower, right? Yeah, be careful now. Be careful now. Mark that high. Mark that low, mark that channel. That will be a fantastic short going back where? Going back into the range again. Because again, ranges act like magnets. So there definitely is a little bit of, there's a slice of money there to make to the buy side. But, really in all reality, if we can't get that 1, 2, 3 go and then get that pullback, or if it just simply slips and, runs higher here, the short side may be the easier side there. And then, of course, if it really keeps on running, there's a lot of open space up there. That's right. That's the all-time high there. So be very careful as we buy. Keep on forgetting that's the all-time high there on the Nasdaq. So I'm sure there's something. I'm sure there's some curveball the market will throw us tomorrow. You guys have a basic idea of what I'm looking for tomorrow morning. And, of course, we'll fill in the blanks tomorrow once we get the opening bell under our belts. Let's grab some gold, shall we? Finish it up on this yellow metal. We've covered a lot in this video so far. I'd love to get your feedback. If you're watching this video right now, I would love to know what I can do better in this nightly newsletter. What do you love? What do you hate? If you're watching this far in the video, you are exactly the person that I enjoy helping succeed in the markets. Drop me a comment in the comment section. I would hope also by now you subscribe to our YouTube channel and hit that like button for me as well. Really appreciate you supporting this YouTube channel. But let me know, right? Or any other video topics that you want me to cover, right? What's the biggest thing I can help you succeed in your trading? I work with traders all day, every day, and I'd love to hear some new ideas as far as what what I can do to help you out in your own trading. What's going on around the gold? What's happening right now? Gold, of course, had that range yesterday. And remember yesterday how we talked about we've got to get up into resistance. We've got that support trend line. Remember how last night we talked about get up, look for that trap? I mean, isn't that just gorgeous? That's a beautiful trap right there. That is exactly verbatim, exactly we talked about last night on the newsletter. And of course, right there bright and early in the U.S. morning session. Beautiful setup for that short. And you can see everybody was loving it, right? Everybody loving it. Now, you'll notice that big strong push. Why is that's an important clue, right? It is, yes. Anytime we see a real big move in one direction, strong move in one direction, that's a big bullseye, trying to go right back down to retest that low. Also, too, look at the separation off the bears. Look at that separation. Look at that separation. How about the bulls? Nothing. Little bit, right? Little bit. Very little bit there. But come on. This is, again, forget about the lower lows, the higher highs. How is the market reacting to the moving average? Again, you can see that kind of theme today, this breakout pullback, right? How to trade these breakout pullbacks. We see these a lot, and what will happen is you'll kind of use the underbelly, right, of that range. Strong move down. They kind of stair step, and they're going to try to run this thing back down, retest those lows. I have a pretty big target there, pretty easy target there, 1781. And then if we keep going, I got my runaway zone. Then that's 1774 there for tomorrow. It would not surprise me if we saw a short squeeze on this. You'll notice I've kind of measured the amount below, measured the amount above. Remember, range-bound markets will rotate. So we'll go rotating down. The buyers want to rotate going back higher again. You've also got some trend lines up there as well. So you could easily look at this and say, well, there's my trend line there. There's my trend line there. You can kind of see how this might be rotating back and forth. So, if the buyers can grab this thing, if they can get their hooks in this thing right now, that would definitely be a pretty good target there, up there for those buyers here for tomorrow. Much like the S&P and the Nasdaq, I would love to sell this market, but I have to specifically respect that pop there for the bulls. The bulls, of course, now have tried once. I would really like them to go a little bit lower and then try twice so I can combine this channel along with this trend line. I mean, that would just be, I don't think you could find a better looking short than that. I really don't. Because now you have everything we've talked about all coming together. We got that strong push down, those open loops, that unfinished business, retesting that low. The buyers are getting roped in, trying a couple times. We're using that kind of channel technique that I've mentioned a couple times already. And then just one more cherry on top is that support trend line turned into resistance. I mean, would that not be the absolute beautiful setup there for the gold? If we do go lower, I wouldn't be afraid of that trap. Again, you have that big open loop magnet, down there. So I wouldn't be worried about a trap down there. Definitely to grab that channel will be great. Remember, the lower we go, the more you need a trap, right? The lower you go, the more you need a trap. If we let's say, for example, we do take out and go lower, the bears come in, hold that pullback, and they jump off the moving average. Now we know we're headed down to that runaway zone now. Mark up that low, mark up that high. Again, I don't care where I am at that point. If I have enough strength jumping off that moving average, that short is going to be very, very reliable. No, it may not go on forever, but it's almost a guarantee to retest that low. So you stop above the high, target that low, leave that runner right down to that 1770 area that I mentioned there earlier. Or, like I said earlier, if the market was to, this is very similar to the S&P too, if we were to, of course, start to make that, spike down, we start to grind lower. Those spiking channels, what do? You wait for the pop. You wait. You don't try to predict the short up here. That's the rookie's game. Predicting is not what we do. We react. We wait for the buyers to come in. We will let them get long, and we simply short right into those stop losses. A spiking channel, trapping those buyers and hit them right where it hurts. Again, I've got hundreds of examples of this kind of scenario in that quick start class that I mentioned, linked up in the upper right hand corner. If you're not consistent yet in your trading, that link up there, that quick start class, it's free. It'll give you a very simple strategy to give you that edge you need to start beating the markets here right now. As we go lower, could I buy down here? You could definitely buy down here. It's going to wait for what? Got to wait for exhaustion. We're too bearish to buy at that point. So you wait for the 1, you wait for the 2, you get those right, get that trend line coming in, and then try to grab that reversal with that new channel. Again, one of my favorite kind of chart patterns is that 2-try failure. Remember, we're very bearish at that point. So even if the range is a magnet, we still got to give those bears the benefit of the doubt. Let them try twice. Buy off. Again, if we get the trend line there, that's even better. There's a lot of variations of this entry pattern. We'll talk a lot more about it. See, almost the example right there. Right? Strong move down, bears once, bears twice. There's a trap going higher there. That's a pretty aggressive one because you can see, obviously, that big, strong move down. In that situation, you're better off waiting for it to retest that low, get that out of the system, and now 1, 2, back up we go. That's why I say if we get back down to retest that low, I don't have any problem with the buy. I got to wait for the bears to try a couple times, get them roped in, buy into those stop losses, grab that new channel, and then hit them on the turn, right? 2-try failure into that. And again, I say pullback. I'm not going to take a pullback pattern. I might. It might be a pullback pattern. It's usually going to be a trap setup or a failure setup, as we talk about in that quick start video. So that's some good ideas there as we go lower. If we go higher here, how do we trade this thing going higher? It's going to be very similar to the Nasdaq, where we may absolutely see it go up, hit that high, and then 1, 2, back down in. That'll be a great short. I've already talked enough about how to short that, whether it goes off here or down. Remember, if it's lower on the chart, look for that trap entry I've talked about repeatedly here so far. That's going to be a great short as well. And honestly, that's a really good trade, because now we get they get that pop, they retest. Now the buyers got what they want. Now they can take their profit. We can rope in the rookies who didn't take the pullback now, and we can short into those stops going down. Or let's say, for example, we really punch here. Right? Market really punches. Now, this actually brings a good point. We're probably not going to use that big channel. Okay? Probably not going to use that big channel. If we get a really big channel here, be careful. If it pulls back to a really wide channel like that, be careful. Because like I mentioned on the Nasdaq and the S&P, if we do pop and we start seeing those deep pullbacks, be careful. Because you're probably going to go right back into that trading range with that little 1 try, 2 try failure setup that I love so much in our trade room, okay? So just be careful in the deep pullback. What you're going to want to see is keep your channels relatively tight on the reversal, okay? On the reversal. Remember, this is short squeeze. This thing should pop. So if it does run or, jump up, grab that pullback, jump off the moving average, find that high, find that low, drill down to your faster time frame, grab that first entry. It should be a relatively shallow pullback. Again, on a faster time frame, we'll drill down. It'll be underneath the moving average. It'll be a failure into pullback combination. If it really pops and runs higher, again, I know I'm repeating myself, really pops and runs higher here, strong move up, shallow pullback, higher high in price, that trap is also money. Right? Again, remember, you want to get to it early as we're going higher here. If for some reason it pops and starts to grind, which definitely might be the case, again, because you got this short squeeze. If it pops up, and then starts to grind, grind. You're not getting that trap, right? I would love a trap. The trap be the best one, right? The trap be great. That trap would be great. But if we don't get it, it pulls up, right? It starts to grind up there. What do? That's a spike in channel, right? Wait for that pullback. Wait for those bears to get trapped, getting short, and hit them right where it hurts. Okay, remember, when you see it grind like that, that's your evidence now. The buyers have it. Then all we need now is trapping those bears and let her rip going higher here. All right, guys, got a pretty good plan of attack here on the goal. When we go up, we go down. Again, we've talked about pretty much all the different possible scenarios here that come to mind here tonight. So we'll fill in all the blanks tomorrow. A lot of the stuff, as you can see, is very, very similar. So will these bears keep this party going lower? We'll see. Will the buyers get their hooks in this thing? Will we get that beautiful trend line combination short, right, off of that high? Just remember, though, you want to see it go a little bit lower, and then pop back up. Man, that'd be a great trade to get those buyers trapped, get those shorts going back down to those lows. Guys, hope you learned a bunch with this video here tonight. Hope I'll see you tomorrow, though, at the opening bell. Don't forget, we get a lot of great membership specials here at School of Trade. Our advanced membership is exactly what you want. It provides unlimited access to all the video classes, all the ongoing software updates, all the trading sessions. I'll put all the details right in the description of this YouTube video. You can also grab a link for this on the website right below me tonight on the trading blog. Don't be afraid to call the office if you guys have any questions. Call the office if you guys have any questions. Even if membership isn't a good fit for you right now, I would definitely be happy to point in the right direction for brokers, charts, data feeds, any questions you might have along the way. You can always email or call the office. We got live chat on the left. We got live chat on the right. So keep in touch. But that's it for me tonight, guys and gals. Hope you had a fantastic day out there. We'll see you tomorrow 8 o'clock Eastern time in our trade room. If not, we'll see you guys same time, same place back here tomorrow night to wrap up what has been a busy first week back after the summertime break. That's it for me, guys. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.